Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Indian markets are flat. They're off a tad bit from the top of the day, but at least the Sensex and the Nifty are holding their head up in the green. And bear in context the Asian market environment. Hang Seng is now down close to about 340 points. So the Hong Kong market has actually deteriorated as the day has progressed. Even the other markets like Nikkei, Straits Times are currently in the red, with cuts of close to about 0.5%. But it's the Hang Seng which is the clear underperformer in the Asian basket. So at least compared to that, Indian markets are faring a tad bit better. The stock of the day is Zee Entertainment, and that is recovering from the day's low. So now it's down just about 3.5%, 3.3%. From the lows, it's been close to a 7% recovery. And this is after the management spoke to CNBC TV18, allaying concerns about how ZEE5 will not erode the company's margins and that the traditional TV business and traditional ad revenues on TV business will continue to stay intact in terms of their growth. So Zee Entertainment is recovering now, in fact, just down close to about 3% odd. But let's speak a little bit more about the global environment, the emerging market currency crisis. Morgan Stanley's Ruchir Sharma defends the emerging market, says the current divergence is a buying opportunity, adds that he sees the dollar weakness going ahead.
For this emerging market contagion to really take the next leg down, something has to happen in China is my point. Otherwise, I think that with the dollar stabilizing, we can come out of the woods, and this may, in fact, represent a great buying opportunity in some of these markets, because some of these markets are really beaten down. The last time you had such a massive divergence and the US markets so dominated the global financial landscape was in the late 1990s, which set up then the great decade for emerging markets subsequently. So I do think that we're coming pretty close to a point where this is going to turn out to be a once-in-a-lifetime buying opportunity for some of these emerging markets, rather than the despair we have today. At some point in time, these valuations need to matter, especially on the currency front. The Mexican currency, the South African currency, these currencies, even the Turkish currency, are now getting to extremely cheap levels. In general, the dollar is very expensive. And so if I have to look out to the next 3 to 5 years, I think the dollar will be weaker, not stronger, in the next 3 to 5 years.
Okay, on to a CNBC TV18 exclusive then. Veteran banker Uday Kotak has warned that a weak rupee is only a short-term fix to improve export competitiveness. Now, in an exclusive conversation with CNBC TV18's Ritu Singh from the sidelines of USIBC's India Idea Summit, he speaks on the rupee. Take a listen.
The rupee was on a REER basis a little overvalued, therefore this correction is fine. There are two ways of getting competitiveness. One is a short-term way of getting competitiveness of our exports, which is improving the currency, that is depreciating the currency. Longer-term improvement of competitiveness is through productivity. And that is where I think India needs a lot more work. And what worries me on our import side is the second largest item of import is now electronics. And as India consumes a lot more, this flood of imports into India without domestic capacity to manufacture some of this is the key reason why the current account is under pressure. Finally, it's about the current account deficit. For the year ended March 2018, we were sub 2%. We were 1.9% of GDP. If you go back to 2013, we were at 4.4, 4.5%. That was a red line. As I mentioned, I believe the amber line for India is a current account deficit not exceeding 3%. And we run the risk of being pretty close to it in 2018-19.
Well, let's move on. It's a historic day indeed. The Supreme Court has delivered its verdict on the validity of Section 377 and its decriminalized homosexuality. CNN News 18's Utkarsh Anand is here with more details. Utkarsh, this is great news, right? No community can now be deprived of its rights or expression of sexual orientation now.
It's absolutely right. That is exactly what has moved the Supreme Court today. Supreme Court had a very simple formula for arriving at a decision. You consider every community that they have the same rights as you also have. Now, choices of sexual partners, sexual orientation are facets of your individual autonomy. Now you are born with it, it is not a disease, it is something that a person is born with. They have a right to have their sexual orientation, make sexual partners, and the state and the government cannot penalize people for being born with sexual orientation of one nature. And now the court said that sexual orientation is not a matter of binary formulation. It's a question of one's dignity. It's a question of individuals' rights, and that when the society will wake up to the rights of every community, why should LGBT community be deprived of their fundamental rights to have sexual orientation of their choice? Now, right to privacy, the 9-judge bench ruling by the Supreme Court has weighed heavily on this judgment. Court said that sexual orientation is an essential attribute to one's individuality. We must respect one's individuality, and right to privacy, which is a fundamental right, it must be safeguarded for all irrespective of their sexual orientation. LGBT community, only by virtue of having a sexual orientation which is not considered to be normal by a certain section of the society, they cannot be put to a stigma, they cannot suffer social stigma, they cannot suffer prejudice, and it is the time for the society to realize that they must be provided with equal rights, equal citizenship. They are as equal as everyone else in the society is. Section 377, although it will keep bestiality, sex with animal, and sexual assault on children an offense, it has been read down to the extent that it penalizes consensual sex between two adults in private. Consensual sex between two adults, irrespective of their gender, that has been put outside the purview of Section 377, and Section 377 has been decriminalized insofar as consensual sex between adults is concerned. Back to you.
Okay, Utkarsh, thank you so much for that. So, historic judgment by the Supreme Court decriminalizing homosexuality. But let's shift our focus back to the markets. Ashwini Gujral and Rajat Bose join us on the show now. Thank you, gentlemen, for joining us, and good afternoon. First, Ashwini, coming to you, the market is pretty much range bound. It is right now trading in the green. But what's your sense? How do you see the markets moving in the rest of the day?
See, the good news is that the bears have not been able to take the market lower all day. And, if you get something to change, like EM currencies start improving or something happens, the market wants to move higher. So my sense is, given the Bank Nifty expiry, etc., the market probably should close a little better from here. But again, use stops for these sort of counter trend moves. And for the moment, I think PSU banks, particularly financials, the way they have been bashed up in last 3 to 4 sessions, I think they need a bit of short covering before, fresh moves can be taken there. So with today's stop, we are long now on Bank Nifty, expecting some amount of short covering. PSU banks are in the green, private banks are in the red. So if some of these banks start to cover their shorts, I think there should be some upside. Having said that, Canara Bank is a buy with a stop of 265, target of 280. BOB is a buy with a stop of 142, target of 154. And PNB is a buy with a stop of 80, target of 91.
Ashwini, if there is a possibility of some short covering bounce, would you look at any of these FMCG names which have gotten hit hard in the last 4 days?
So you can look at basically anything that's come off fairly hard. So some consumption stocks are also likely to bounce back today. I think Hind Unilever is already in the positive. Reliance is seeing some amount of upside. So I would think that consumption and financials, where the hits have been large, there the short covering could be more pronounced.
Okay, Ashwini, but Rajat, coming to you now, what's your sense on the markets? Ashwini believes that the bears could not take control and maybe we'll end the day a tad bit higher. Is that your sense as well?
Well, actually, the kind of movement that Nifty has exhibited yesterday, and I generally get my senses from the stock movements in the Nifty 500. Yesterday only I talked about that there is likely to be a recovery that is today. And I strongly believe that we would see 11,500 plus in the Nifty in the late session, and also the Bank Nifty closing higher from the current levels, because Kotak Bank, ICICI Bank, these banks will also perform well. And overall, this is actually a recovery rally. And personally, what I would avoid is FMCG stocks, even though they might show some recovery, because the kind of fall that they have seen, they need time to consolidate before you purchase them again. And as such, to my mind, the valuations of them are also not very conducive for investments at current levels. The stocks for today that I have chosen at this hour, Cummins, when I gave a buy call to your desk, it was at 780, now it has moved up. But yet I would suggest that even at current levels of 792 or so, you can buy, and 799 and 805 could be your targets, and now put the stop loss below 783. And Piramal Enterprises, you buy that with a stop below 3013, 3088 and 3120 would be the targets for Piramal Enterprises. You can see a good recovery rally in Piramal Enterprises as well.
Well, the Nifty is trading in the green, and it's that bit of outperformance when you look at the other global markets, whether European or Asian, that one are trading in the red. And a few stocks that are moving higher. Well, Z Entertainment, of course, is the big stock of the day, and that has recovered around 6-7% from the day's low. Other than that, UPL is up around 1.5%, and Bajaj Finserv is also seeing a tad bit of up move in the last few minutes. But as promised, let's get you an exclusive voice from the Axis Capital conference now. Dharmesh Mehta, the MD and CEO of Axis Capital, joins us now. Now it looks like the market is reacting to the macro challenges in India, rising crude prices, depreciating rupee, as well as the global tensions and the trade tensions that we are seeing. What is your general stance? Is this the phase of correction, or there are genuine reasons for markets to pull off from here?
I think so. It's a temporary phase because the global factors are not in India's favor. You have a sliding rupee, which is more of an emerging market issue rather than only India. So clearly there is some nervousness based on that. And as you know, investors get hurt most, especially the foreign investors, when the rupee slides, because it's a big underperformance. So they've been hit by the current fall also, plus the rupee fall. So clearly there's some nervousness on it. Crude is also somewhat a concern, but it's still not an alarming thing. I would say rupee and interest rates going up will be the key concern for the markets.
Okay, you spoke about rupee being a key concern, and that is probably why the reason why FIs are not big buys in the Indian market, because markets are up in dollar terms, but the portfolio is quite down for most of the global investors because of rupee. Do your global clients also react to the rupee depreciation?
For the existing investors already, that's obviously going to be a worry, because the underperformance is hit both ways, by the market fall and the rupee fall. But for a new investor, a rupee fall is actually great, because he has to put lesser money to actually get more INR value to buy stocks. So for a new investor, this is an ideal time coming in, because it's coming when the rupee is at its lows. While for an old investor, he's got hurt because the rupee is depreciated. But overall, net, people do invest in the country based on the fundamentals, and if they see there's a good opportunity, good companies, they're more open to buy. Like we just did 2 large placements in the last few weeks. One was AU Bank, and the other was L&T's Infotech recently, and both of them got an overwhelming response. So a good quality, a good stock definitely gets a huge response as in when the supply comes in. So I wouldn't say people are only on the sell mode. Selectively they are buying, and that's why you saw the large caps actually outperforming the markets at in the last few months. And some of that outperformance had taken the markets to a little bit of a unreasonable valuation, which is not getting corrected. But is it a bear phase, or we are worried that this is a big correction? I don't think so that's the case right now.
Okay, so not worried that this is a bear case or a big correction, but India seems to be the only place where there is growth, and earnings momentum has also been strong in the last couple of quarters. Is that something which is comforting the global investors?
In fact, that's why we're having a conference, so the people hear it firsthand from the corporates, saying that, what's the earning growth looking like? And as and when we speak to corporates who are here, and even in India, we're getting actually more and more confidence on the earning change which is happening, and people are more bullish, especially the corporate side, of seeing a revival and the demand picking up. So if you see, the good and positive sign for India is that the corporate ink is getting more bullish, and the earnings cycle has to now come back, and the fundamentals are much stronger than earlier.
Okay, from an earnings point of view, which are the pockets where you think earnings could positively surprise?
Fundamentally, net, whenever I meet clients, corporate especially, the revival is there. They're being more bullish. You also started seeing interest coming in the NPAs when people have started bidding in the NCLT process. It just tells you that the same assets, there were no buyers earlier, and now you're seeing 2 or 3 bidders coming in for the same asset. So it just tells you that corporate is in a buy mode right now rather than build mode. But eventually, after elections and once you see stability politically, you'll see capex on the ground increasing, and they'll start coming in the build mode, which right now is in a buy mode.
Okay, you just briefly mentioned about the political stability as well, and we have a lot of state elections as well as general election coming up. Is that a bit of worry for the global investors? Is that something that comes up often in your talks with global investors?
Well, it's critical, but it's not as if the markets have only on political reasons. We have seen, even earlier also in a hung parliament or a coalition government, the markets eventually done very well. So yes, few months of bearishness comes in, but eventually markets start recognizing the fundamentals, and history says that even in a coalition government, India has done well. But yes, election is a key thing for everybody to focus on, and once the state elections happen, that will set the trend for the upcoming election. And if that's a little bit more positive than what people think, you might see the rally coming in much earlier than the election process, which we saw in the last 2014 election also, that the market started rallying much before the election results come out. So crucial time will be this November to January, and if you see some positive surprise from what negative perception people are already in, markets can see actually a rally coming up before the elections.
Okay, and the free fall on the rupee continues. The rupee has breached the 72 mark for the first time, and it's the velocity of the fall that has started worrying a lot of people, and that's shaken the market confidence. Just last week, we were at sub 70, and now we've come down to 72. In fact, the rupee has been falling consecutively for the last 6 or 7 trading sessions. And this morning, in fact, Lata was telling us how there is largely stability for the emerging market currencies. So the fall in the Indian markets seem to be linked to us itself. So that's the big headline. The rupee has breached the 72 mark against the dollar for the first time ever. And it's the velocity of the fall which has gotten people, a bit anxious now and a bit worried. Just look at the way the rupee has collapsed just in a matter of moments. It was hovering around 71.9, and now we're suddenly talking about 72.05. So it's a 15 paise fall in the rupee just in a matter of moments. There has been pretty much up until now at least a hands-off approach from the Reserve Bank of India, and the government statements which have come through have indicated that they want the rupee to find its fair value. Let's go across to Lata. Lata, just look at the way in 5 minutes the rupee has fallen about 10-15 paise.
I think we should pull up other currencies and more importantly the dollar index and crude. This could be in response. Now it's climbing now to 72.05. See, this is typically the London opening time. So there could be fresh dollar purchases because somebody is winding down long orders. Well, the dollar moved up a little bit. If you remember in the morning, dollar was at $95 index, 95, and it even went to 94.95 and 98. So the dollar index is clearly shot up, and that itself is emerging markets negative. I just want to put a few things on the table. One, rupee was an extremely strong and well-bid currency from, say, February to July, when crude was falling from $80, almost 79, to we saw it go almost to 72 or 71. And that was the time when Indian earnings were improving, the fourth quarter and the Q1 earnings were. So India was such a good bet at that time that people just piled on long positions, hedge funds. And then everything kind of went berserk when externally the lira and peso and the other contagion started for the emerging markets. It coincided with our August trade deficit coming in, which was in mid-August. We got the number, the July trade deficit, which was an kind of earth-shattering $18 billion. That meant a current account deficit probably of around 3%. It kind of coincided like a perfect storm. Just as long positions on the rupee piled like never before, you had a situation where emerging markets were first in trouble. Our own trade deficit was a scary number. And then, everything started unraveling together. Now for the fall, the Reserve Bank and the government realized that, you just have to allow it to fall, to adjust so that imports become expensive, exports become attractive, and the deficit naturally over a few months adjusts. But the point is, at what level do you stop? This is a slippery slope. Once it starts falling, and even sometimes small lots can take, bid the currency lower and lower. Now what bankers are watching out for is when will the government stop saying that they are comfortable with the currency fall? Now, the more you say that this is a welcome adjustment, the more somebody will short it, and shorting itself will become an advantage. What is the right number is always difficult to say. It's a moving target. We have indicators like RER, the real effective exchange rate, which is a 36 country trade weighted basket against which you measure our currency. But all these are at best signposts. Unless there is something strong in terms of a physical support coming from the Reserve Bank, this could be a slippery slope. And I think at the moment, someone seems to have taken 72.15 as a place to even sell the dollar. So we are seeing some bit of stoppage of this peak of this sudden spike that we saw.
In fact, Lata, we've got Anant Narayan also with us on the phone line.
And I think Bhaskar Panda is also there. Bhaskar, I think you must be at your trading desk now. What caused this sudden spike in the dollar?
No, I think there was, stoppage, by whom. And once you stop it, then coming to the market, then it just spots. So that is the practical news of it. Second thing is that, right now people are nobody is talking about except me probably, there will be some retracement. So I have been saying this, but nothing is happening. So that is something I don't know.
Were public sector banks selling dollars at any point today?
I think they were selling, if I could say. So there was. Otherwise, it would have been at 72 even in the morning itself.
Okay, so there was a supply of dollars. But what caused this last 10-minute fall in the... is there some big purchase going on? People talk of defense or oil payment or, some 2-3 days back it was MSCI rebalancing. Is there any external demand that came in for the dollar?
No, I didn't see any external too much demand coming. Oil and all those things are regular. So they keep on coming and they keep on buying. So that's a regular phenomenon. So I have not seen any or not heard any large payments going through. So this fall was something like, waiting to happen, and it happened just when, people are not looking at it. That is my sense.
Okay. Well, Bhaskar, do stay on. Anant Narayan has also joined us. Anant, good morning. This is, one would have thought at 72 it's well adjusted. What's keeping it slipping lower and lower?
Good afternoon, Lata. Yeah, the excitement doesn't abate. I think you covered it very well earlier when you described the challenges that RBI faces. I think the current level and what we are seeing happening in the rupee is a controlled move by the RBI. Now, the problem with the RBI trying to control the rupee is exactly as you described. It can be a slippery slope. You can see demand coming through from people who are unhedged. And this time around, the demand seems to be coming from local players. So both Friday evening as well as, later in the New York time and Singapore time, actually NDF markets were reasonably well behaved. It's only when our own markets opened that the demand suddenly shot up again. So it looks like, make no mistake, RBI has plenty of reserves to manage short-term moves in the rupee. Where the rupee settles eventually will depend upon the RBI. And that is a hazardous task of trying to guess where the RBI will come in. But I do think they will come in here. I tend to agree with Bhaskar. Uncontrolled fall of the rupee is not desirable neither for trade and capital flows nor for sentiment. So at some stage, RBI will draw the line. Earlier, they drew the line, if you remember, at 69. And they defended it vigorously with $25 billion of intervention. I think post-Turkey and other geopolitical events are coming through. They've moved the line a little back, but it's a tactical retreat rather than an actual free fall. And I think RBI will come and hold it at a particular point in time. But, the larger issues remain. We do have, broader financial stability issues that we need to address. RBI has plenty of reserves to buy us time. Within that time that it buys us, we have to address those issues.
Okay. Bhaskar, I just wanted to ask you, how were the other currencies moving? We saw the dollar index go from slightly sub 95 to 95.16. Have the other Asian currencies also responded, or are we an outlier today?
No, we have been outlier for quite some time now, even if you compare with, say, Indonesian rupiah, which has been in the same kind of trouble like us. But if you take from January onwards, I think we have been outlier this year, definitely. I am yet to find a real story why we have been outside. However, having said that, if you go back, I mean, if you see the longer term, movement in all these currencies, which has suffered so much in the past also. So from 2011 onwards, I was looking at the chart. I think we have been almost in the higher quadrant
of depreciation.
Yeah. So that can be one of the reasons. But today's movement is something which is, is a continuing, pessimistic view that we keep on.
One point which bankers made over the past couple of days is that what I was just saying, that somebody from government or RBI needs to talk. It's not just the support that comes in the way of sale of dollars. Yesterday, the finance minister was pretty calm and said that, we are falling for global reasons. He didn't sound worried. Their point was that if someone says that, we will go all out to support our financial stability or our macroeconomic stability, some statement that obliquely says that we won't let the rupee go downhill, some talk of support is what is needed. Would you say that is needed, and has the time come for that?
I think that is needed at any point of time when there is huge volatility and when there is, market is betting against currency. So that is definitely, that would help the markets, sentiment at least. And that will also quell the, way people are pessimistic about the rupee right now. So probably that could help, yes.
Okay.
That would.
Well, what would your view be, Anant? Every banker says the same thing. Somebody from government or RBI has to talk up and say that enough is enough, and we have the strength and we are not like any other currency. Do you think it needs to be talked now?
It's a tricky one, Lata. So to start with, RBI doesn't talk.
Yes.
And Delhi doesn't stop talking. Neither of which is helpful, to be honest.
Okay.
But, on should RBI stand up and say something right now? Frankly, I like the point about them intervening and doing more and talking less. We've seen other central banks, for instance, Indonesia, which has done all the right things by the textbook, orthodox, intervention and verbal intervention. And it has seen a lot of sell-off as well.
Yes.
So sometimes, talking at a time when you're not used to talking can be seen as a sign of weakness.
Okay.
So it's a tricky line. So what I would, probably expect and hope is that RBI should do the talking, not Delhi at all. Currency is in the matter of is a problem of RBI, at least in the short run. And maybe in a speech or in response to a question after the next policy press conference, give a broad statement saying exactly what you're saying, that rupee is different, we have plenty of reserves. Yes, we have some financial stability issues, but they're not unresolvable, and they can be addressed, and we will address them over time. I think that's a little more helpful. But yes, what wasn't helpful over the last few weeks and months, talk about 80 and, people making all sorts of comments. So that is completely uncalled for, especially at a time when Bombay is not talking. It's a kind of a tricky situation. So it's a tricky one. You don't want to sound panicky. You don't want to announce special schemes for oil demand or for... Because, you have reserves right now.
Yeah.
You first exhaust that before you do that.
But Anant, have you done... I know RER is not the best of indexes. Nevertheless, at 72, do you think it's fallen enough and... there is a natural correction of the trade deficit that will be in order because imports will become expensive and exports will become attractive. So maybe in a couple of months, are we already at the right currency level to correct the deficit? Anant? Okay, I think we'll have to redial to Anant. Bhaskar, do you all have an internal calculation? Have we, adjusted on RER terms enough, or are we still overvalued? Okay. Something wrong. Either I have lost my hearing or something is wrong with the talkbacks. Okay, I think we'll fix that. It's always difficult to check out at what point we have depreciated enough. Anant, I'll just repeat my question. Do you think rupee has depreciated enough for it to be reasonably valued in RER terms?
Look, Lata, you and I both know RER is a medium-term metric. We can't manage daily movements based on RER. So current RER, I presume, would be about 111 for what it matters. Look, ultimately, it's a judgment call that the RBI has to take. As I said, RBI has plenty of reserves right now to manage the rupee. This is not a free fall. The RBI has ammunition to manage stuff. It's not like 2013 where the reserves felt inadequate to manage the outflows. Right? Yes. That's not the case at all. Now, at 72, RBI has to take the call. Does our current account now improve over time, such that our basic core balance starts to improve and not become such a drag on the rupee, right? Yeah. And now against that, it has to juxtapose if you allow further fall, if you allow, let's say, RER to adjust to 105, and therefore allow rupee to go up to 73, 74, 75, that will obviously raise a lot of issues, and short-term sharp movements are rarely helpful.
Yes.
And plus, it sets up a panic. So if it's a call that RBI has to take, and unfortunately they don't have a documented, intervention policy which we can compare against.
Yeah.
But if I was in the RBI shoes right now, yes, we've seen a move of the line from 69 to 72. I think it's a good time to come in and intervene strongly. You don't want panic setting in unnecessarily.
Yes.
Use the reserves. It's okay if we expend a bit of the reserves. Don't let panic set in. But make it clear that in the time that RBI can intervene and buy us time, certain, basic issues have to be addressed. Okay. The issues faced by our exporters, the nature of our flows, the banking sector health, the fiscal deficit situation, all of that has to be, addressed over the next few months. Okay. RBI can buy us time.
Okay. But as you say, the currency will perhaps bridge the deficit this much. Do you think the government has to come with some things in terms of import controls or in terms of export packages?
So look, the basic math looks as the following, Lata. Our current account deficit will be, let's say, $85 billion this year, or let's call it $80 billion, right? And let's say FDI is going to be $35 billion, which means our basic deficit is going to be in the nature of between $45 billion or so, about $4 billion a month.
Yes.
Now, what is the other worst thing which could happen? We know an overhang of unhedged exposures. Importers have not covered, exporters have sold, FPI in debt, NRE deposits. All of that can reverse out, and some of it can reverse out. So let's say another $40, $50 billion of that can go out. Even in the worst case, that's about $80, $90 billion.
Yes.
And starting from a time when our reserves are $425 billion.
Yeah.
So, we have plenty of reserves to manage. And yes, we will see headlines, we will see people panicking and all of that. But RBI can easily manage those kind of outflows and buy us a few months, if not a year.
Okay.
Now, what the government should be doing, hopefully the adjustment in the rupee should itself help the current account.
Yes.
But beyond that, we know there are issues in exports. There are enough number of commentators who have talked about issues dogging exports, the ease of doing business. Why is it that ready-made garments is moving out to Bangladesh and to Vietnam rather than some other time?
Yep.
Coming to us. So those issues have to be addressed.
Okay.
Likewise, Make in India is great. Let's make it work. Make in India for India should happen as well.
Yeah.
Why are we importing so much of smartphones?
Yep.
Why are we importing so many other manufactured products? Those things which will take time have to be addressed.
I can tell you a little something which will put this in perspective separately. I mean, separate from what Anant is saying. Other currencies have also depreciated, so this does look like a dollar strength story rather than only a rupee weakness story. The Filipino peso in the morning was actually stable. It was even appreciating a wee bit, and now it is depreciated by 0.25%, 0.27 down. Singapore dollar 0.11 down. The rupiah is still stable, but then it's quite possible it's not a very deep market. And the ringgit also is, I think, flat. I don't see any rate on my screen, at least. The lira, I think, is open for trading, and that's also depreciating a bit. We have Koon Go joining us. Koon, should you say that India's the rupee falling to 72 is part of an emerging market currency fall, or are we becoming outliers?
this is definitely part of what's happening to EM markets generally. Sentiment by foreign investors towards EM is quite poor at this point in time, given concerns around Turkey and Argentina. And even though India's fundamentals are nowhere near as bad as those countries, the reality is that investors are scrutinizing countries that run current account deficits. And India, with its deficit set to widen in the near term, is part of the reason why we've seen lackluster FPI flows, and that's contributing to the weakness that we've seen in the rupee.
But, I mean, how long will we go with this explanation of EM crisis? Crises do abate. Currency crises don't go on and on for months. Don't you think, or are you getting a sense that the crisis is anyway near abating?
This is a very difficult question to answer. Ultimately, it revolves around confidence, and certainly there is a lack of investor confidence towards EM generally at this point in time. Quite what the circuit breaker is, I think is difficult to say. I mean, if you look back at the 2013 taper tantrum episode, for example, part of the circuit breaker, apart from the RBI hiking interest rates aggressively, was the U.S. Federal Reserve turning a little bit more dovish, following the comments from Ben Bernanke. This time around, we are expecting the U.S. Federal Reserve to hike rates this month and follow up with another rate hike in December. And the focus will be on whether or not the Fed feels compelled to carry through with the tightening cycle next year. And really, that's the crux for EM, how long this current sell-off can persist, partly rests on the U.S. Federal Reserve.
Okay. On the rupee itself, where do you see some semblance of equilibrium coming in? Should it have come at 72, or do you think it can overshoot?
Yeah, so when we look at what is fair value for the rupee, our estimation puts it at around 73. So even at current levels, even though it's at record lows against the dollar, we feel that the rupee is still somewhat on the overvalued side. Okay. And I guess the risk is that even if we get to 73, if sentiment remains poor, we could get into a little bit of an overshoot territory.
Oh, right. Okay, thank you very much. That's yet another perspective coming in. Emerging market crisis has not abated, and there are people who are looking at lower values for the rupee as well. Anant, Bhaskar and Koongo, thank you very much for joining us in this conversation. Well, we should be prepared because global emerging market crisis quite clearly is still continuing.
Yes, absolutely. And this 5% fall in the rupee in a span of 1 week has shaken the confidence of the market. Let's pull up the intraday chart of the market, of the Nifty as well. It's fallen about 50 points in a matter of moments right now. The key level to track on the rupee will be yesterday's level, intraday low, which was 11,400 thereabouts. So we're still holding above that level. But as you can see, we're off from the morning high, and weakness is seen in oil marketing companies, IOC, HPCL, BPCL. Reliance Industries is weaker in trade. Corporate sector banks like Yes Bank too have seen quite a bit of a fall.